One of a central bank's most important roles appears only in emergencies, but it quietly protects the financial system every day, acting as the lender of last resort. Understanding it reveals how central banks prevent crises from spiraling. The lender of last resort role means that, in a crisis, the central bank stands ready to lend money to banks that are sound but suddenly cannot get funds elsewhere. When panic strikes and normal sources of lending freeze up, the central bank can step in and provide emergency funding, acting as the backstop when no one else will lend. Why is this so important? Banks are vulnerable to a particular danger. They lend out much of the money deposited with them, so they do not hold enough cash to repay everyone at once. If many depositors demand their money simultaneously, a bank run, even a fundamentally healthy bank, can run short of cash and fail. Worse, fear can spread from one bank to others, threatening the whole system. This is where the central bank steps in. By providing emergency funds, the central bank can stop a temporary panic from becoming a collapse. If people know the central bank stands behind the system, panic is less likely to take hold in the first place. This backstop helps keep the financial system stable and protects the savings and payments that everyone relies on. For example, when a wave of panic causes depositors to rush to withdraw money and lending freezes, the central bank provides emergency funds to sound banks, stopping the panic from bringing the system down. Central bank mandates, tools, and targets vary from one country to another, and they change with economic conditions. Even economists disagree about how policy and money creation really work, so check which institution sets the rules where you live. The main lesson is simple. A central bank acts as the lender of last resort, standing ready to provide emergency funds to banks in a crisis, preventing temporary panics from collapsing the whole financial system.